All right. Hello and welcome to Module 3, or Fundamental Analysis. I'm Philip Margulis. Fundamental analysis is the process of determining whether a company is a good investment opportunity by studying its business, its financials, and its market environment, its leadership, and everything about the company that is not stock market indicators. First off, there's two types of analysis: fundamental and technical. These two types are very different, and in this module, we're going to cover the first type. I think an easy way to describe them is fundamental analysis is what to buy, where technical analysis is when to buy. Technical analysis focuses on price charts and patterns, while fundamental analysis focuses on company's value and performance. Fundamental analysis, why does it matter? First off, using fundamental analysis techniques, you can identify strong companies, you can avoid bad investments, and you can support and sustain long-term growth. Fundamental analysis helps reduce risk and make informed investment decisions. Where to look? First off, these are the sites that I would use in my own research and what you should use when you're trying to study a company. Their website and their investor relations page. Their 10K is your Bible. It's Mecca. It tells you everything you need to know and more about a company and their financials, their earnings calls, and their company press releases. You can also look at the SEC filings, and if you're short for time, you can check out Yahoo Finance, Bloomberg Terminal if you have the money, or Google Finance. And on all these websites, you can find clear and concise financial data about any public company in the world. There's three basic sections of fundamental analysis: the business model of the company's financials, and the company's market and industry analysis. First one, what does the company do? Who runs it? How does it make money? Second, are the profits, revenues, and cash flow strong? And third, how does the company compare to its competitors? What is the company's status? Business model. First off, you want to find the core product of the company and whose target customers it has. You want to find the main revenue streams. What kind of sales? Is it government contracts? Is it private sector? Is it loans? Does it appeal to what kind of consumer? What base of consumer takes this company's products? And what is the outlook for the future? Third, what is the niche of this company? What do they have going for them? What's their brand? What's their market position? Let's say Tesla, electric cars, or Nvidia, semiconductors, or Carvana, a car renting firm, or MCOR, which we're going to use later in this course. In this module, we're going to analyze our own company. MCOR in its own is an industrial company. That's their competitive advantage. It has over 70 industrial locations around the world. Next up, so this is MCOR. This is a company overview of MCOR, which, as you can tell, is an infrastructure company. And take some time and read over this. And this is how I did a stock pitch for my internship. I went over and I portrayed MCOR and gave an overarching description of the company. I included what it does, who invests in it, what was it known for, recent news, how many employees, and its revenue. And that is very important for a company's overview. Leadership. Strong ethical leadership drives growth. Check when you enter in a company and enter in a position, always check the leadership and see in their tenure have they done a good job or not. Because leadership can build good corporate trust, prevent scandals, build investor trust, and lead a company to success. For example, the new Lockheed Martin CEO, not doing too good of a job. In the past years, done an amazing job. That's an example I like to use. Financials. Here are the major financials. I know it's a lot, and it can be a bit daunting, but these are the ones I look for. Of course, PE ratio, if the stock is cheap, undervalued, or overvalued and expensive compared to its earnings. How high is the PE? Investors can expect strong future growth with a high PE, or if it's a low PE, that could signal slow growth or a cheaper, more efficient company. Debt to equity. How much does the company owe debt to what it owns equity? High debt. Risky. Company has to pay interest, and if it's not making money, high debt can build up, and the company can near solvency. Low debt. That's safer, but too little debt can mean the company isn't reinvesting, and they're stable where they're at, which can impact the stock price. Revenue sales. How much money the company makes from selling its services. Expenses. The cost of running the business. And net profit. What's left after expenses are paid? Net profit is revenue minus expenses. EPS, we've already covered it, but I'll cover it again. EPS shows how much profit a company pulls in off each share of stock. A high EPS, companies making money, that's profitable. A growing EPS over time, that means that every single quarter the EPS is beating expectations and analyst predictions. Suggests a strong, profitable company. Beta. Beta, not like in the mean way, measures how much a stock moves compared to the overall market. If a beta is 1, that means that the stock moves along with market trends. More than 1, volatile; less than 1, less volatile. High beta stocks are like Palantir or Nvidia. High gain, high loss potential, but if they break out, very successful. Low beta stocks, utilities are safer, but they grow slowly or shrink slowly. And a big drop in one day of bad news will take a while to course correct. Financials. Now, this is kind of delving into accounting principles, and I do not expect you to understand all of this. But a balance sheet, and well, let's just track these simple facts. A balance sheet is what a company owns versus what it owes. An income statement measures revenue, expenses, and net profit over time. Cash flow tracks how much cash moves in and out of the company. The balance sheet, assets, what a company owns. This could include cash, buildings, inventories, equipment. This could also include supplies, accounts receivable, buildings, liabilities, what a company owes, loans, bills, and unearned revenue, unpaid expenses, accounts payable, and equity. Equity represents ownership in a company. Stocks, common stocks, retained earning, shares. That's what it means. The unearned revenue is money received by a company, but the company has not done the service that they owe for that money. So an example could be Taylor Swift. You spend $2,000 to go to her concert. She gets $2,000 in cash, but she now has $2,000 of liability because she owes you $2K worth of performance. Income statement shows how much a company makes. Key parts are revenue, expenses, and net income. The most important one here is net income. The company can make a ton of money, but if it costs more money to run that business, it's not making money, doesn't matter. Cash flow. There's 3 kinds of it. First off, cash flow is just how much green paperback is running in and out of the company. There's 3 parts: the operating cash flow, the investing cash flow, and the financing cash flow. I'd recommend going more in depth into this. I'm not in this course, but all I'm going to say is as long as the cash flow is positive and growing, it's a good sign. Now here's an example from my personal stock pitch of EMCOR. I included its PE ratio, which compared to its industry PE is very high. Its debt equity, pretty low, not a lot of debt. Its year growth to that date of 134%. That means that 1 year to that day, the stock was 134% less. Levered free cash flow. Levered free cash flow is not much different. Just think of it as a free cash flow. Over $1 billion, a lot of money in the company. And debt compared to cash flow, not even a fourth. EPS predictions through the roof, and it's beating its earnings per share estimate every single week, every single quarter. And on this graph here, you can see that EMCOR's growth is beating its company, its sector, its industry, and the S&P. You know, I bought this stock at 387, and about a month ago when I sold it, it was at 530. Goodbye. More financials. RPO, performance obligations or unearned revenue, $9.79 billion. They have a lot of work. And 55% year-over-year jump in data center RPOs, which shows how, because of the AI boom, this company is thriving off that AI boom. Return on equity of 35% shows an efficient industry control. An industry average is 15%. That shows that this company is efficient and making money. And a cheeky dividend increase is not a bad sign. Next up, look at sector and industry performance. Sector and industry performance. A sector is a broad category of business, i.e. technology, healthcare, or energy. Meanwhile, an industry is a more specific group. That is software, pharmaceuticals, oil and gas, toys, semiconductors, this or that, right? And an example here, EMCOR. EMCOR is in the engineering and construction industry and the industrial sector. There's different industries within a sector, but EMCOR's sector is industrials. Sector trends. When you're researching a company, look at, is that sector growing or is it declining? How have the past 5-10 years be? How is the new presidential administration favoring that industry? Are there new innovations? Is there new unicorns? Is there new up-and-coming stocks? For innovation, it was not so bad. It was tracking the S&P, but at the end of the year, kind of fell off. But it's important because if a sector is underperforming, maybe it's not the best idea to invest in a stock in that sector because as commonplace, stocks follow their sectors. Now, here for MCOR sector overview. Industrial stocks jumped 30%. U.S. construction industry is going to reach 2.8 trillion by 2026. That's a lot of growth. And my biggest reason why I bought this stock, it's simple. AI boom requires data centers. Here's some more stuff, just talking about data centers and why I believe that investing in AI is smart because of how it's going to grow the sector. And that's that. Thank you for sitting through my presentation on fundamental analysis. Hope you learned a lot. Please rewatch, and if you want the slideshow or the MCOR pitch, just email me. My email is going to be in every single bio of these videos. All right, thank you.